How to build a 3-month emergency fund without sacrificing your life. If you're serious about financial freedom, there's one non-negotiable safety net you need: an emergency fund. But let's be real. For many people, the idea of saving 3 months of expenses sounds impossible. Where would I find the extra money? I don't want to live like a monk just to save. What if I have debt? Today, I'm going to show you exactly how to build your first 3-month emergency fund without sacrificing your lifestyle or feeling miserable. Let's get into it. First, why 3 months? Most financial experts recommend 3 to 6 months of living expenses. 1 month for too little cushion. 12 months, too excessive for most people. 3 months strikes the perfect balance. Enough to cover sudden job loss, medical emergencies, or major repairs. Small enough to build without taking forever. Once you hit 3 months, you'll feel lighter, more confident, and financially safe. Step 1. Know your emergency number. You can't hit a target you haven't defined. Start by calculating. Rent, mortgage, utilities, food, transportation, insurance, minimum debt payments, essential medical costs, skip, vacations, dining out, subscriptions. Entertainment. This is survival mode money, not full lifestyle money. Example: rent, $200, food, $400, utilities, $200, transportation, $300, insurance, $300, debt minimums, $400, medical, $100. Total, $2,900 per month. Your 3-month target of $8,700. Now you have a crystal clear number to aim for. Step 2. Create a temporary savings sprint. Think of your emergency fund like training for a short race, not a lifelong marathon. For the next 6 to 12 months, shift your focus to saving aggressively. This is not forever. It's a temporary sprint to protect your future. Cancel unnecessary subscriptions. Pause big purchases. Sell unused items. Pick up small side gigs. Redirect tax refunds or bonuses. Every dollar gets you closer to full security. Step 3. Automate the process. Willpower is unreliable. Automation is bulletproof. Set up a dedicated savings account, separate from your checking. Schedule an automatic transfer every payday. Start with any amount you can afford. $25, $50, $100. Even small amounts stack up when automated. When you automate, you stop thinking about saving. It just happens quietly in the background. Step 4. Use windfalls wisely. Most people waste extra money because they don't have a plan for it. When you receive tax refunds, work bonuses, cash gifts, rebates, immediately funnel at least 50-75% into your emergency fund. This accelerates your progress dramatically. One windfall can knock out months of savings effort. Step 5. Separate emergency from unexpected. Many people confuse emergencies with things they should have expected. Holiday gifts, annual insurance premiums, car maintenance, back-to-school shopping. These aren't emergencies. They're irregular, but predictable. Create a separate, irregular expenses sinking fund for these. Your emergency fund should stay pure, only for true, unplanned events. Lost medical emergencies, major home or car repairs, family crises. 6. Step protected from yourself. One of the biggest risks? Rate your emergency fund for non-emergencies. Keep it in a separate savings account, not your daily checking. Don't link it to your debit card. Give it a boring nickname, like emergency only, to discourage temptation. Out of sight, out of mind. The harder it is to access casually, the more likely it will be there when you truly need it. Step 7. Build while paying off debt. Many people ask, should I save my emergency fund or pay off debt first? The answer: do both, but in stages. 1. Build a starter emergency fund of $1,000, $2,000. 2. Aggressively attack high-interest debt. 3. Once debt is under control, fully fund 3 months of expenses. This protects you from falling deeper into debt when life happens. Step 8. Adjust as life changes. Your emergency fund target isn't set in stone forever. If your expenses increase, adjust the goal. If your job becomes unstable, increase your cushion. If you downsize, you may need less. Review your emergency fund once or twice a year and tweak as needed. The real benefit isn't the money, it's the peace. The money is important, but the real power of an emergency fund is Psychological, you sleep better. You make career decisions more confidently. You avoid panic when things go wrong. You eliminate the need to borrow during crisis moments. An emergency fund buys you time, space, and peace. That's worth far more than any short-term sacrifice. Final CEO mindset. Emergency funds are self-respect. Building your emergency fund isn't a punishment. It's an act of self-respect. It says, I care enough about my future self to create protection. Every deposit you make is a vote for your own peace and stability. Start small. Stay consistent. Protect your progress. If you found this practical, subscribe for more real-world personal finance systems that actually work. And don't miss my next video where I show you how to build multiple income streams if you have a full-time job.